such an amazing question. You win. Best question of the day. So I'm just glad and I love that you're asking this question before you actually go home shopping. So you're in the market to buy a house. You're going to use your VA loan. Whether you're renovating the property, purchasing, or refinancing, this same rule applies. Yes, if you buy a vehicle or you open up any new debt that's going to report on your credit report or show on your bank statement, you want to be careful with that because it can negatively impact your qualifying for your home, and it could also make it to where you don't qualify to buy that house. Ultimately, the best thing for you to do would be to wait until you close on your home to buy your new vehicle. But if you absolutely cannot wait and you need a new vehicle sooner rather than later, then the next step is you need to call your mortgage lender and you need to make sure that they understand what you're going through and they understand that you have to buy a new vehicle. They can talk to you about whether you're trading in one of your current vehicles that is already included in your debt to income ratio, or you're just getting a brand new vehicle that's not included in your debt to income ratio, and then they can give you parameters. How much, what's the maximum amount of money that you can spend, both in a total balance and monthly payment. I'll be honest, the monthly payment matters more than the total balance, but it can have a negative impact on your credit score. So that's the other thing you have to be careful of, is if you purchase the vehicle too far in advance of buying your home, it could negatively impact your credit score when, if for instance, like a lender like us, we do a soft pull when we're pre-approving you, but we have to do a hard credit pull before we close. So once we get your contract on your home, we're going to do a hard credit pull. So if when we're doing a hard credit pull, your credit score has dropped from the soft pull and you opening a new vehicle loan, it could negatively impact your credit score, which then affects your pricing. Now again, on VA loans, there's no minimum credit score requirement. However, it's going to affect your interest rate pricing potentially, and we don't want to put you in a position where your rate goes up because you had to buy a new vehicle. So now if you're not borderline and you have lots of room in your debt to income ratio and your credit scores are super high, I wouldn't be as concerned. However, I would still talk to your mortgage lender and make sure that they double check that you're good to go and you don't negatively impact your chance of being able to buy and close on the home that you want. Lastly, when you're going to the car dealership to shop for a vehicle, get pre-approved by your bank or credit union before you go to that car dealership for your auto loan financing. Car dealers are going to hate that I'm telling you this because they actually get like kickbacks or they make extra money on the dealers or the financing companies that they work with. But you might be able to get a better deal through your credit union, and then you need to make sure that they do not pull your credit multiple times. Please tell the dealership and the salesperson, please do not pull my credit more than one time. I only want one credit inquiry on my credit report. Now, in theory, multiple inquiries in a period of time, in a short period of time, like 60 days, they're only supposed to impact you as one credit score. However, I haven't fully tested that, and it's really difficult to test that because every month your credit card balances are changing and everything is adjusting and changing. However, that's what the CFPB states. The credit inquiry algorithm is not supposed to impact you negatively, but I still hate seeing somebody go to a car dealership and having their credit pulled 20 times for one car loan. I think it's insane, and you really don't need that. So those are the things that you should make sure you're doing before you purchase a vehicle while you're also shopping for a home or open any new debt that could negatively impact your credit score and your ability to buy that house.